Welcome back to Daily Wall Street. It's March 21st, 2025, Friday, and I hope you're all ready for the weekend. But before you head out, we've got some major market moves and AI drama you need to know. Let's start with what everyone's talking about, the triple witching day. This is the third Friday of March, June, September, and December, when stock options, index futures, and index options all expire. Today alone, a staggering $4.5 trillion worth of contracts are settling. Now typically, media loves to hype it up as a recipe for market chaos. But historically, it's not the expiry itself that causes lasting volatility. It's what follows. Think of it like a seismic reset. It clears the slate and sets the tone for the next big wave in market positioning. Meanwhile, U.S. indices pulled back slightly. The Dow slipped 0.03%, the S&P 500 dropped 0.2%, and the Nasdaq 100 lost 0.3%. Semiconductors fell harder, with the SOX index down 0.7%, and small caps also slid. Despite a choppy session, the broader market still seems locked in a short-term rebound pattern. The key levels remain intact, especially the 5-day moving average. Turning to economic data, we had new jobless claims and existing home sales. Claims ticked up to 223,000 but still came in slightly below expectations, pointing to a stable labor market. But here's the nuance. Hiring demand is cooling. Companies aren't laying off aggressively, but they're also not rushing to add headcount. On the housing front, February existing home sales jumped 4.2% year-over-year, beating forecasts. Inventory rose 5% month-over-month and 17% year-over-year, giving buyers more choices. Prices edged lower, suggesting some relief on inflation. It's the classic spring thaw in housing, with both seasonal momentum and structural demand kicking in. These numbers, paired with recent data, reinforce the view of a soft landing, stable employment, moderate inflation, and no panic triggers for the Fed to slash rates aggressively. Bond yields reflected this. The 2-year held around 3.97%, the 10-year at 4.24%. But let's talk stocks, and specifically the AI theme. Accenture was crushed after earnings, falling 7% in its worst day in a year. And no, it wasn't a terrible quarter. Revenue beat expectations, EPS came in strong. The problem? Margins shrank. Accenture's doubling down on AI investment, sacrificing short-term profit for long-term positioning. Not everyone's thrilled. Plus, government cost cuts are squeezing their public sector pipeline. If you're holding Accenture, this could be a setup moment. Watch for valuations to dip below historical averages for potential re-entry. Then there's Micron. After months of consolidation, it popped nearly 4% after hours following strong earnings. Revenue came in at $8 billion, beating expectations, and EPS crushed at 1.56. The real highlight? HBM, high bandwidth memory, driven by surging AI, data center demand. The CEO says all 2025 HBM inventory is already sold out. That's huge. Micron expects billions in HBM revenue this year and continued strength into 2026. Traditional segments like PC and mobile memory are stabilizing, but it's clear AI is the rocket fuel. Bloomberg just called out the AI supply chain titans. NVIDIA, TSMC, SK Hynix, and yes, Micron. NVIDIA holds 90% of the AI GPU market, TSMC owns 90% of advanced chip making, and SK Hynix leads in HBM3. But Micron is catching up fast, expanding capacity and gaining NVIDIA certification. If demand keeps growing, Micron's market share and margins could expand rapidly. TrendForce estimates the HBM market will grow 156% this year alone, reaching $46.7 billion with a projected CAGR of 42% through 2033. Last but not least, the quantum computing drama. Remember when NVIDIA's CEO, Jensen Huang, said quantum computing was still 20-30 years away? Yeah, that tanked quantum stocks. Then he announced a Quantum Day event. And now he's apologizing for his earlier comments, saying he didn't even know those companies were publicly traded. That's wild. The event turned into more of a PR therapy session than a catalyst. No big announcements, no real NVIDIA. Collaborations, Just a group hug and vague optimism. The market, not impressed. Quantum stocks tumbled again, with no clear roadmap for commercialization or profitability. So where does that leave us? We're in a market where AI is real, monetizable, and reshaping earnings across sectors. Companies like Micron are benefiting now. Meanwhile, speculative plays like quantum computing still lack the fundamentals. If you're looking to allocate capital, think long-term adoption, earnings visibility, and pricing power, not just buzzwords. That's it for today's Daily Wall Street. Don't forget to like, subscribe, and hit the bell to stay ahead of the markets with us. We'll see you on Monday. Enjoy your weekend and trade smart.